traders, welcome out to your RBNZ rate statement. It is going to be interesting how tonight goes as to whether or not they're going to raise rates. The consensus is that they will not, but we shall find out together here shortly. So let's come over.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
And let's take a look at expectation. So the expectation is rates unchanged at 5.5. As you can see there, there is a little bit of debate. They're certainly not going to cut rates. Let's get that out in the open. They're in a rate hiking cycle. The terminal rate is expected to be somewhere in the neighborhood of maybe upwards of 6%. The central banks need to get inflation under control. And so as we're looking at this in terms of opportunity and so forth, there is a little bit of a chance, certainly, that they raise rates. Now, last time there was a much better chance. I think that they won't, but we came on last time we did the RBNZ last month, and it's funny, they weren't expected to raise rates, and we said, oh, we certainly think they're going to raise rates. It's very probable, very possible, and so forth. And they did. And this time, I do think they're going to pause at this meeting. I would anticipate a hike at the next one. And usually, the statement itself that comes out along with the announcement of rates is very important, and I think that the Kiwi could still rally because the statement is probably going to point towards future rate hikes, and maybe a more likely than not that we hike rates at the next meeting and so forth. Now, if we look at a chart of rates in New Zealand, again, central bankers go on trends, meaning that they don't hike and then cut and then hike and then cut every other meeting. When they're in a rate hiking cycle, they hike for a little while. When they're in a rate, sitting cycle, when they're in a rate cutting cycle, then they keep rates unchanged, and then they cut rates for a while, keep rates unchanged. Well, we've been in a rate hiking cycle. In fact, quite historic in terms of how rapidly rates have gone up over the past year. And generally speaking, when you do that, there could be things that break. It's been pretty impressive how the economy and how other asset classes have held in. So as we saw when they first started to hike rates, that's when risk assets really got punished. Now a good deal of this is priced in, and so the markets have been able to rally and adjust and so forth. Where are we at? Well, again, they could pause and then hike. Those things happen. I mean, you'll see little pauses and so forth, but I would still expect that before this is done, this is going just a little bit higher and then some sort of pause. Not immediately back to a rate cutting. Again, usually you plateau for a time and then maybe we would cut rates in the future or something along those lines. But that would be my expectation. Now, let's talk about potential trades. So I am laser focused on two ideas. My two ideas are, one is bearish on the Kiwi. And if we're bearish on the Kiwi, I like pound Kiwi. This up, that down. So we would go long pound Kiwi if we wanted to be bearish on the Kiwi. If I wanted to be bullish on the Kiwi, then we would short, I said that wrong. We would go long, so we would still buy Kiwi USD, and that's actually this chart. We'll look at both of these. So that would play the Kiwi to the upside if we went long Kiwi US dollar. So notice if we buy Kiwi USD, we're bullish on the New Zealand dollar. If we go long pound Kiwi, we are bearish on the New Zealand dollar. So it all depends on how we see this meeting, what our expectations are after this meeting, so on and so forth. But that would be basically your breakdown. Is this is the way to play the Kiwi to the downside, this currency pair. This is the way to play the Kiwi to the upside, this currency pair. Now let's talk about why. Generally, I move from later dated and we work our way in. So let's start out a little bit further in time. The daily chart of Kiwi USD, not too much to see. We're just kind of in this choppier pattern. But my rule of thumb, what I like in terms of trading, is whatever time frame I'm going to trade. So let's say we're going to trade the hourly. I like the next longer time frame to agree with that trade. So that would mean that the 4-hour chart would need to be bullish. And it's these two time periods where you start to see a little bit more bullish price action, in my opinion. So let's turn to the 4-hour. Look at the chart pattern in Kiwi USD. Classic ascending triangle type of pattern. It's been basing here for some time. Looks like we could be on the cusp of a breakout. So 4-hour chart is bullish. If we flip that over to a 1-hour chart, it's going to look similar but more drawn out, but you can still see this consolidation and potential breakout, or maybe even you could go one step further and say, well, even if we did dip, I might still be interested in buying as a little cup and handle before we ultimately break higher. So that would be one way to look at it. Again, we're trading shorter time periods. Maybe I could even go shorter term than that. I could say, well, we could just play a 15-minute chart. Well, in that case, high basing. It's rallied. Now it's just basing sideways for a few candles. Could spike and surge to the upside. But you notice all of those charts bullish, and that represents a bullish outlook on the Kiwi, if the Kiwi we think is going to go higher. Now, if it's going to go lower, this one made the most sense to me, which is pound Kiwi. And you'll see everything's a little bit reversed. Now, same chart, still upside break potentially happening, still ascending triangle. But here's the interesting note. Now the Kiwi's flipped. So it's very similar. It's similar in that this pairing looks like it's going to go higher, but that's thanks to the strength in the pound. The pound has been stronger than the Kiwi. So actually playing this pair to the upside would get you short the Kiwi, would get you bearish on it. So it's the exact opposite outlook. If I turn to the 4-hour chart, maybe it's already in the makings of a cup and it would need to pull back a little further for the handle. But that type of idea, again, bullish. And I could trade the 4-hour chart because the daily chart is bullish. Because the daily's bullish, I want my next longer time frame to be bullish. So if the 4 hour is bullish and the 12 hours bullish, then I can trade the 4-hour. If the 12 hour is bullish and the daily chart is bullish, then I can trade the 12-hour. If the daily chart is bullish and the weekly chart is bullish, then I could trade the daily time frame. So I want the time frame that's just longer than mine to still be bullish. If we go into the hourly chart, if it pulled back just a little further, it would hit this little Bollinger Band, still be above the 50 MA. That's our Bollinger Band criteria that we teach. So there's again, that's the hourly chart. There's a few different possibilities. Again, maybe the lowest time frame I could trade, well, that's bearish, so I can't do that. So I'm essentially looking at a 1-hour, a 4-hour, that type of trade setup, because that's where not only do we have a bullish setup potentially on those time frames, but we also have the next longer time frame fitting and working with that outlook. So they're somewhat polar opposites because one plays the Kiwi up and the other plays the Kiwi down, but interestingly enough, they both work. They both have similar outlooks and so on. So we'll see as we come into the announcement. We're about, it looks like 4 minutes away from the actual announcement, and the trade can somewhat go kind of quick in that it's not going to be a position where we're probably going to sit here and watch it for the entire life of the trade. The only way we'll still be in class as the trade progresses is probably if we get stopped out. Usually if you get stopped out, that happens quick and early. If it moves away from your entry and you get some room, well, then we'll hold it for a few hours. But let's set up possibilities and ideas here. I would still consider the pound Kiwi on a little bit more of a dip. So I'm watching that on the long side. We're also watching Kiwi USD to go long, and this one I might be a little bit more interested in a dip. So I'm sort of looking at this as a fading of the initial reaction. That's my initial instinct, is to say, okay, if it reacts this way, perhaps we can go ahead and trade it. So we could slap, and I won't be necessarily trading off of this platform, but let me just slap an example order here. We could put that at 2.078, put in a hypothetical whatever, 4 round lots, attach some bracket orders, whatever, and put in our target, and maybe we'll just go, I don't know, we'll start with 50 pips higher or something, and we'll move it around here in a second, but let's go to 206.90 or something like that, and what did I do wrong? 207. Let's try a couple of things here. What do I have messed up? Did I mess up the price? 2.082. 2 point, yeah, that's way too high. Okay, so now we've got kind of the idea, and this target's way up there. We would obviously not be targeting anything that large, but we can move this around and across different time periods to kind of say, okay, where do we think this thing could go on some sort of breakout, and where would we want the buy, and where would we want the stop loss, and so on. And across a couple of different time periods, I think this type of setup would work, where we would probably be risking, in this case, so we'd probably be looking at this in terms of risk and reward and saying that seems like a bit more risk than we would want. 2.0831, 2.08. Let's put it like this. And 2.0850 or something like that. And we can at least kind of drag these around. Whoops, I want to separate them out. But just kind of looking at this and saying, okay, where would we be willing to buy? Where would we stop out? And what would we target? And keeps dragging the whole thing when I grab the target, but something like that. And then seeing how that lines up if we come into that hourly chart. And it probably fits. This one is a little low. We'd want that above this level of moving average. This one could be raised up a little bit, and this one's up near those highs. You're looking at this, and we've got a decent reward to risk ratio, where your potential profit is larger than your risk. And I think if this goes back up to that resistance, frankly, I think it's going to break out quite a bit. So I would probably have my target quite a bit more elevated, frankly. And I might even be looking at a 3-to-1, 4-to-1, 5-to-1 type of reward to risk ratio. You know, somewhere in that neighborhood looks a little bit more compelling to me. That 4-hour, that daily, I mean, I think we should trade up there towards 210, which is kind of how we have it constructed now. So it's a big upside target. Now the announcement came out and pound rallied, so it did not touch the lower band, kind of running away a little bit, but I think we would get some choppiness in here. And the fact that there's some energy, the fact that this is rallying, tells us we're probably hunting in the right place. So now it's questionable as to, well, how do we raise our price to get in, and where would we put that stop? And I still like that type of risk to reward. Here we've got a possible buy order at 210.11. That doesn't look quite right. Why does it say that? I've got my buy out of whack. That's what's happening. I need my buy order there. I had these backwards here. I wasn't paying attention. I was just grabbing the lines and they got out of whack. So it would be like that. So now it's in proper order. 208. Oh, 208. 42. Probably that candle high. 43, right around there. Stop loss below. Now it makes sense. Stop loss below right around 208, you'd be risking about 43 pips. And the target, you know, 210, I mean, you've got 100 or so reward, over 100 pips of reward for 43, 44 pips of risk. And I think something like that would make sense. And, you know, I could see even bumping this buy order up just a touch and raising that stop somewhere in that neighborhood. But this is the pairing that I think makes sense. And again, given the reaction of the markets, it would work really well with that, because that influx is, well, they're selling the Kiwi. That's the knee-jerk reaction. So that's where I would be looking still, on the long side of pound, on the short side of Kiwi. It's starting to go up a little bit further. I would probably bump this order up. See if we can get filled. I'm going to call it 208.54. Still raising my stop, but I want my stop just below that pivot low. That low was 208.11. I've got it at 208.10. So that would still be that 44 pips of risk. Let's see if it can hit our price at 208.54. Now let me recreate this on my other screen here, and it may freeze the screen a little bit, but I'm not going to trade it directly from this screen. If you were, you would just hit that transmit button, but I actually trade on a little different account. This one is a more educating account, but anyway, I'm not sure this is going to trigger, but we're certainly looking at the right area. We're certainly looking at the right currency pair. It's just continuing to go up instead of a little bit more choppiness that we need to get an order filled. So we'll see. We can remain patient with that, but that would be the idea. If you look at the risk to reward, again, we'll put it up here. The buy is around 208.54. The stop, 208.10. Risk, 44 pips. Target, I called it 210, and I think I've got that target. We were just grabbing and moving it around. Right around 210 is my target, and it doesn't want to cooperate, so we'll just fill it out here. Sometimes moving those will be a little tricky. 210, which by the way would put you 144 pips above. So very compelling on the risk to reward side. 144 pips above if it goes up to 210 and hits that target price. So 210 the figure, 44 pips of risk, 144 pips of reward, and pretty, 146 I believe, because 208.54. Yeah, I got to redo that in my head. 146 pips of reward. So nice risk to reward, most definitely. I think we'll leave it there. I still suspect this order will get filled. I think with a little patience here. Now it needs to get filled either on this current candle or the next candle with a little choppiness. There will often be price overlap. That means you have essentially this hour and the next hour to get filled. If you're not filled within those two time periods, this absolutely has to be canceled. If it really takes off further, well, then we pretty much have to cancel it, because if it goes all the way up here, we don't really want it if it's falling and collapsing back down too much. If it's just bouncing right now but gets some choppiness, fully on board with continuing to look at that trade. So I think we've got the right area. We've got the right currency pair. Now let's see what we can do. All right, we'll leave it there. Thanks everyone for joining us. On behalf of Maverick, this has been your RBNZ rate statement meeting, and we'll see if we can get long pound Kiwi tonight. Thanks again. We'll see you next time. Goodbye.
Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?